Well underway in the second quarter of 2023, and the global market situation is still unsettled as we rapidly approach the 6-month mark. The financial world has been rocked by recent events, with the collapse of Silicon Valley Bank and the rescue of Credit Suisse causing investor confidence to falter. As a result, we're seeing a trend away from traditional investments and towards safer options like gold, bonds, and last but not least, wine and spirits. While alternative investments, such as wine and whiskey, are not entirely immune to market risks, their unique market dynamics may offer some protection in case of a sudden macroeconomic shock, as evidenced by the Silicon Valley Bank collapse. As usual, I'm joined by Rune Spid, Commercial Director of RareWine Invest, to assess the wine market right now. Welcome. Let's start by addressing the liquidity in the market, which is a common concern amongst investors of collectibles. What about the liquidity in the wine market right now? Should investors be worried?
It would be naive to claim that the wine market is unaffected by the current geopolitical situation. It is undoubtedly not unaffected. In times of economic downturns, the wine market responds with stability, unlike most other markets. We see only minor price increase or even decrease at the moment. In fact, it is very rare for the price of wine to fall in the long term, which is why wine should be seen as an asset with a long investment horizon.
We had to remind investors of this when we faced a similar situation in 2019. On top of a record year for wine investors in 2018, the trade war between the US and the European Union and civil war-like conditions in Hong Kong, and last but not least the fuss about Brexit, created problems on world markets, removing liquidity from the wine market.
Periodically, it was not the most exciting development to watch. But those who invested before and doing this are the investors who are smiling the most today.
Yes, there's a lower limit to how cheap a wine can get before professionals believe it's too cheap and start to buy. And we've seen some exciting opportunities in the market lately that we did not see just a year ago.
Yeah, one must remember that it's all about availability. 2019, 2020, 2021 are all small vintages in Burgundy. They can be challenging to acquire now and even more so in the future. Being able to source quantities is vital. You can always find a single bottle or even a cheap case. But the strength is in the numbers. When the portfolio is realized, offering larger quantity is the key to attractive selling price.
In addition, we'll stay true to our beliefs in the Burgundy Index and some of the best upcoming producers that have not yet cemented their name in the wine top. In that category, it's still possible to source attractive quantities to form an excellent price starting point for investment. We'll definitely see more of those investment cases soon to come.
Champagne is another category that we strongly believe in. Also here, we have experienced that the liquidity in the market is still there. Despite growth in the past few years, champagne is still too cheap compared to the best Burgundy or Bordeaux wines. And according to our sales numbers, demand is rising in Asia. And according to Bloomberg, a fun fact demonstrating liquidity in the market is that the revenue at the casinos in Macau is slowly recovering after the pandemic.
Analysis and consulting firm Global Data predict that the market for wine in China will almost double by 2026. Growth is expected to be driven by China's millennials and Generation Z as they gain purchasing power and become the wine drinkers of tomorrow. Furthermore, it's estimated that in 2025, China will be the world's largest market for luxury products, according to Bain & Company. And according to Union des Maisons de Champagne, China was just the 14th largest export market for champagne in 2021, 93.8% smaller than the US, which is reported as the largest, and only marginally larger than Denmark, with a population of only 6 million people.
I have noticed, Lars, that many of our investors are curious about our analysis of future investment. What trends and cases are we looking into for the next few years?
Besides more upcoming growers, particularly in Burgundy and Champagne, as we have already discussed, we are looking increasingly towards Italy. Especially the Piedmont area is attractive from both a wine lovers and wine investors' point of view. The 2019 Barolos in particular, if we have to be specific, or the Barbarescos from 2020. Italian wines in general are peaking these years. They have done a great job mapping the vineyards in Piedmont, as we know from Burgundy. Also, the price of land in the area is too high if compared to the cost of the wines. much like what we saw in Champagne a few years ago, leading to price increases.
Recently, we have addressed Italian wines as an affordable luxury. More people can afford to consume a bottle of Montalcino or Sassicaia. Even in terms of prices, the best Italian wines are far from the same price range as those from Burgundy or Bordeaux. We have secured more direct allocation in these areas to ensure the best price starting point from investment, perfectly mature wines to the wine lovers worldwide in the future.
Whisky is another category that has shown remarkable performance and resistance in the past 10 years. Fine whisky is up by 373% from 12 to 2022, leading to more investors wanting whisky in their portfolio.
According to Knight Frank's World Wealth Report from 23, whisky is the 10-year leader among investment of passion, ahead of art, cars, furniture, watches and other collectibles. Even though fine whisky is mentioned as an inflation buster, one must remember that whisky is slightly more volatile than wine, but we see some exciting investment cases.
The Knight Frank Wealth Report 2023 recently reported that 39% of ultra-high net worth individuals are likely to invest in wine this year. Further noting that, and I quote, "Interest in alternatives is on the rise and will be where wealth is grown over the coming decade." With that said, remember to subscribe to our YouTube channel to stay tuned about the wine market. And go to RareWineInvest.com to take advantage of the latest investment opportunities. Thank you for tuning in.